Telstra, the numbers so far not terrific as far as share market response, even though they met expectations.
I guess in terms of the share price action, what we are seeing is a little bit of buying on the rumour and selling on the fact. In fact, if we have a look at Telstra's share price over the past 5 trading days before this result came out, the share price actually up by 2.4% and now performing the market, which has only been up by 0.5%. So a bit of selling coming into Telstra on the back of its results, but it has been quite a solid result. It does look like Telstra's strategy of simplification, service and subscriber growth has been working for the company. And in terms of this update, the market was really watching for two things. Firstly, any hints of capital management, and secondly, whether the mobile subscriber growth momentum that we saw in the fourth quarter of the financial year continued into the first half. In terms of the capital management, we really haven't heard too much in terms of hints. The market is hoping to hear of a special dividend or a buyback perhaps later this month. So we'll be keeping an ear to the ground for any hints of that today. But also in terms of mobile subscriber growth in the fourth quarter, we did see some strong momentum with 378,000 new subscribers being added in the fourth quarter. And it was good to see that that momentum sped up and continued in the first half with 958,000 new subscribers in that mobile area. So Telstra continues to gain in that mobile space, and in terms of sales revenue, that's added an extra $430 million. One of Telstra's aspirational targets for FY13 is for EBITDA of $10.8 million, and with the momentum that we are seeing in its business at the moment, it does look like it will be able to achieve that aspirational target simply with the sales momentum at the moment. But if we have a look at Telstra, there's also Project New, and that's resulted in cost savings as well as productivity gains of $456 million. So it has been winning on the productivity and the cost saving side as well. They haven't changed their full year forecast, that remains the same. But Telstra, it's had a good run up coming into this result, and we are seeing a bit of selling on the fact, down by about 2%.
That said, so far this year, the broader benchmark's up almost 6%. Their shares only gaining 3.3%, so they have underperformed.
It's not surprising to see Telstra underperforming in this risk-on environment. Telstra last year was one of the best performing stocks in the ASX 200, and that's really because we saw the market losing around about 12%. And when we do see a risk-off environment where the market is falling, Telstra is one of those stocks which gains favour because of its strong dividend, 28 cents per year, one of the highest yields in terms of the blue chips. But of course, when we see the market running up, as we have done in January, the best January that we've seen in decades, then we do see some of these defensive stocks like Telstra, like the utilities, taking a bit of a back seat while those growth stocks run up hard. And what we've seen in 2012 is a risk-on rally for at least the first 6 weeks of the year. And that's resulted in strong gains for things like the material space, but taking a back seat other defensives like utilities, like telecom, Telstra, as well as the consumer staples area.
Just to tell viewers, we will be taking you back to that Telstra briefing in roughly 10 minutes and counting, so dipping in for more of a feel for what David Thodey and his Chief Financial Officer have to say. More broadly, Julia, on the market, the underperformance, given the fairly tepid Wall Street lead, is this just waiting for Godot territory with Greece, or could we get a lift in the afternoon on Chinese CPI?
I guess the central issue for the market at the moment is Greece, and we are still awaiting a deal. So the market is still sensitive to headlines coming out of Europe, and we're going to be watching that very closely. But of course, as you mentioned, Carson, China numbers coming out later on today. We will see inflation numbers for January, and they are expected to ease from 4.1% in December down to 4% in January. So it really does look like inflation in China peaked in the middle of 2011 and is coming down. The market's still hoping to see more interest rate cuts or cuts to the reserve requirement ratio coming out of China over the next couple of months. So these inflation numbers are going to be an important part of whether we do see more interest rate cuts in China. But of course, the dominant theme on the market today is earnings season. We've had big earnings out from the likes of Telstra, News Corporation. Later, we'll hear from Rio Tinto. And I guess part of the drag on our market is really BHP Billiton. Yesterday, it came out with its earnings. Overnight, we saw a poor performance in both London as well as the US. In London, the shares were off by more than 2%, and in New York, we saw the shares down by about 1.3%. So we are seeing the shares down by 1% and dragging on the Australian market. Also, we've seen the Aussie dollar pull back slightly overnight, so back under the 108 US cent mark, and that strengthening in the US dollar, of course, negative for commodities. So that material space really weighing down the market. That pullback in gold price that we saw, the pullback in silver price that we saw, the market down by about 0.3% and underperforming the region at the moment.